You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuikStrike, options pricing and analysis software. QuikStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuikStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuikStrike is the perfect addition to your trading toolkit. Learn more about QuikStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuikStrike1. That's QuikStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is. From a futures options trading and trending and analysis and unusual activity perspective. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Coming at you at our new time here on Thursday at 1:30. We'll get that VO updated for you there at the top of the show. So make it like a little easier for you guys. You can join us live if you like on Thursday. Of course, you can always get the podcast a day earlier in the week, which I think a lot of you will like on Friday morning as opposed to waiting until Monday morning to look back at the previous week. So a lot of you might like that as well. And of course, you can always listen live every Thursday, I should say now. Got to get out of that Friday mode. Thursday, 1:30 p.m. Central via Mixlr. You can always get the show via our site or the CME site or iTunes or wherever you get it. Of course, Deep Dives, the app, and our site, probably the best places to go. However you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do like to hear from you guys. And joining me on the old program today, my cohort, my partner in all things futures, options, crime, the founder of Bantix Technologies and creator of a little program I like to use around here a lot called QuikStrike, Mr. Nick Howard. Nick, welcome back to the show. How's your Thursday going, sir?
Oh, busy Thursday. Waiting to see what kind of action we can discover here. I'm looking. I'm not too impressed with the markets today. So we'll see what goes on.
Yeah, it's been kind of a weird week. We got a lot of give and take to get to, of course. Now, are you settling into the new day? I know Thursday was kind of a better day for your schedule as well. Are you starting to feel the flow of TWIFO on Thursday, sir?
I think I like it not being on Friday because then I just feel like I can start my week end a little bit earlier, especially in the summer. But we'll see. I got to get the flow going no matter what day it is. So we'll see how it goes today. So far, so good. Let's get some live listeners. I'm not seeing too many live listeners out there right now. So we'll have to see how that works.
And, we got a lot of topics to get to. And, of course, we're still doing it live. Only second week we've done it at this new time. So we're trying to retrain the audience to come join us at this time. But I think it makes sense. I think let's start. What do you think, Mr. Nick? You think we'll start? And should we start in the Texas T this week? What are you feeling?
Yeah, I think we go through our standard run through. There's not, I took a look. And that's going to probably be one that people want to talk about because it's gotten beat up again this week and sort of probably a good place to start as always. I like keeping a pattern to what we cover and then peppering in the extra stuff as we go along. So that works for me.
Well, it works for me too. And what we got going on this week, it was an interesting week for the Texas T, kind of across the board. A lot of different stuff kind of popping off. We saw some interesting developments earlier in the week from the American Petroleum Institute, EIA, talking about falling crude and gasoline inventories. And then later on in the week, or actually coming in, I believe today, we saw some issues, more Saudi tankers coming under attack over there. So that, of course, causing them to shut down easier for me to say, the Bab el-Mandeb choke point in the Red Sea. That's another area where a lot of crude flows through that on a daily basis. So as a result, we're seeing a little bit of a pop towards the end of the week. Again, a lot of that focusing on Brent, but we're seeing an end week lift here in crude as well, closing out the week right around, or I should say, the week through Thursday, because it is an earlier day, through pushing the 70 handle, 69.5, net up about a handle going into today's show here. A lot of interesting stuff. Have you been following all this kind of back and forth out there in crude land this week, Mr. Nick, with kind of these kind of competing stories? Once again, as supply story versus, shall we say, tumult in the Middle East versus a bunch of other stuff going on out there in crude land. You've been watching all this?
Well, to be honest with you, I've took a moratorium from any of the news sites for the last 4 or 5 weeks just because of all the BS that's getting spewed out there. So most of my observation is going to be from a technical and volatility and price movement standpoint. So as much as might be going on, I tend to just watch the technicals and the data more than I do the news, because for every black there's a white in terms of the comments. For every up there's a down, so it's almost like it balances itself out. So if you watch the numbers and look at the vol and see the patterns there, it's that other stuff doesn't interest me, because it's just I hear it, but I'm not seeking out that information because I'm just not seeking out news. So everybody should try it. because you have a much happier day when you don't look at what's going on from all the crazy talk that's going on.
I can get on board with that, particularly if you divorce yourself from the politics side of the news. Then you get you're a much happier person. I used to be one of those 24-hour news junkies watching all the networks and all the shows, and you realize it just adds a lot of needless anxiety to your life for no reason whatsoever. You're worrying about things that have no impact on your life whatsoever, and things you can't have any impact on. So you're right. It is a little bit of, I think once you take that step and take it back, you do your research in the morning or so, and that's kind of about it. Check in throughout the day on big stories. But yeah, people who have the CNN or the Fox News, whatever your pick is, MSNBC on 24/7 in the background. That's just a lot of toxicity that is injecting.
Yeah, it's a lot of. Yeah, you gotta. I mean, and it sounds silly. It might sound trite, but you gotta keep away from that negativity, and it just makes your mind a lot more free. And that doesn't mean you don't pay attention. I mean, you pay attention. I like numbers. As much as I like to read words, I like numbers. But you can get numbers and you can get that EIA numbers and those kind of things. Those are more kind of just objective observations. And just I like the market. I've been just watching the markets in general more. So watching numbers, patterns, and even though there are a lot of fundamentals that affect this market, you still, as much as that's there's still always the technicals and the volatility data and open interest, all that kind of thing that really sort of, I can conject just as much as anybody who's reading all this news and trying to guess which person's gonna, spit in the wind this week and determine which way the price is going to go. So yeah, not to poo-poo the news at all. It's just it's there for a reason, obviously, but I still just like the numbers. I see the price going down. That means there's a change in that direction. I see the price going up. There's sentiment there. I see volatility, come in. All those things are telling me stuff that I don't necessarily have to read. So anyway, I hate to. I don't sound like a disinterested citizen. I'm definitely interested, but sometimes you just got to break away from it all. So.
I think that's just a sign of a saner citizen at the end of the day. I did that myself a few years back, and I've been a happier, healthier, saner person, I think, as a result, stepping off the treadmill of madness. Speaking of madness, before we get into the options numbers here and interesting analysis, I couldn't help but notice this one coming out. I just like the analogy of the crude market to Space Mountain, the roller coaster in Disney. This is coming from, what is this name? Robert McNally. He was the president of a Rapidan Energy Group, and he was testifying to the Senate earlier this week on the 24th, I believe. And his conclusion, I just like his conclusion. I'm going to read this here. He said, in 2012, I had the honor of testifying to your colleagues on the House Small Business Committee and noted crude oil and therefore pump prices had entered a new, quote, Space Mountain era of boom and bust price cycles. I maintain that view. If a new swing producer does not emerge, we should all buckle up for continued roller coaster ride on Space Mountain. So there you go. I like that kind of analogy. And it kind of gets back to what we've been saying before, Nick, that there are maybe this kind of gets back to that, what was that prediction they had recently? It was super spike in crude over 125. That gets back to the same issue he's kind of talking about here. Maybe longer term on the production side, we haven't really been keeping that capacity up. And I guess that could be an argument for you if you're a longer-term crude bull. Maybe we'll see if we see some options paper reflecting that this week. But maybe if you're a longer-term crude bull, Nick, I don't know. You like this? You like this Space Mountain analogy for crude?
Yeah, I think. Well, I think what he's saying, or at least if I'm interpreting, everybody's going to interpret it a different way. It means prices are going to go up and prices are going to go down, right? So that means there's going to be volatility, which means that. Pay attention to the numbers. Pay attention to that, and you should be able to trade, right? I mean, that's my whole point. You can read anything into all these news and stuff, and you and I have joked about this over the last couple of years when there's analysts giving ridiculous price ranges, and then when there's OPEC comes out and says what everybody expects it to be, and then the market goes completely the other direction, right? The last OPEC meeting, it was sort of a stalled agreement, and the next thing you know, we rally $7, right? So it's so I do like that because it makes me think of the market movement, which means you should be able to trade, and even if it's not like a high volatility number, I think at least you're getting something that is going to shed some interest on that market, and you can do some options. You can have some fun while that's happening. As much as I like commodity prices to stay low, because if we're going to be consumers of it, but if we get a little Space Mountain, that means they're up and down. So it should be fun to watch.
Let's get into the options before other madness strikes here on the show. Looking here again, you guys can follow along. CMEgroup.com/TWIFO, TWIFO. When you're ready to step up, put on the big boy pants, Bantix.com, BANTIX.com. Click on the try out QuikStrike, and you too can see exactly what we're talking about here. You fire it up, make sure you make those shows expiration settings are set to this week, so you can actually today, Thursday, a day earlier, so you can see exactly what Nick and I were looking at here. And then you get on into the top left drop down there, you see a bunch of products. You're going to choose crude, you're going to choose energy, then crude oil, and then WTI. And you will see exactly what we are looking at here today. Crude coming into the show right around 69.5, up about a handle on the week here. So not bad. And again, another week where the vol kind of coming in a little bit of a rally net on the week, seeing vol coming in, but not a huge vol apocalypse, kind of a little bit of a contraction. We saw a little bit of a mild elevation coming in the last couple of weeks coming out. Again, this is kind of the boom and bust cycle we've seen for a while with crude vol. Nothing crazy to write home with there. In terms of what was lighting it up, number one with a bullet, it was the, what do we got here? It was the SEP 65 put, which is a little bit shy of where we are, like slightly out of the money puts, about 4.5 handle out of the money puts here. Lighting it up to the tune of about 19,000 and change. Looks like the lion's share coming today, actually. Again, some of that news probably driving a lot of action today. So our OI numbers are kind of wonky. Let's see here, because we're not going to have today's numbers. 65 puts lighting it up. A lion's share coming today in WTI, 11,600, I should say, almost 20,000 on the week. And OI slightly closing, but then again, we don't know today's numbers, so we can't speak for sure on today's paper. Number two, the 67 puts, so a little bit closer, a little bit nearer at the money puts, doing about 15,000 and change. The lion's share of those also coming today. And then we got number three here coming in hot. Let's see here. Let's skip around a little bit. Let's go to the 70 calls. Also in SEP doing about 11,500. The lion's share actually on Tuesday, 5,000 and change. Net about a little bit slightly closing on the week. Before I keep rolling, Mr. Nick, how's that? Can you hear me a little bit better now?
Yeah, I can hear a little bit better. I do hear a little bit like I hear a little bit of feedback, but it's fine. It's more like the buzzing. But I asked you if what source of TWIFO you were on, because I mistakenly had my tab on last week. So I was like, what are you looking at? And
you thought I was on crazy numbers.
Ironically, that just shows you where we are right now. The fact that the 70 call and the 65 put last week were the same leaders for SEP. So, we're trading in that range. We got we got some of what we lost back. We basically got what we lost back last week, this week in terms of price movement, but, volatility down 2 weeks in a row. So when you get the same two strikes, which happen to be the two highest open interest strikes in September trading, that means we're pretty much in a rangy pattern at this point, so.
Yeah, it is interesting to see. Sorry, listeners, just trying to sort out who can hear what here. A lot of conflicting information coming into me over here. But let's look here, as we like to do, Nick. Let's look a little bit farther out, a little bit farther afield. It's not all front month, as we know in crude. The numbers get a little bit spread out. They come all over the place, including, let's go a little bit farther out. It looks like actually we got kind of both sides of the spectrum this week, Nick. So if you're a hardcore crude bull, 90 doesn't seem as crazy crude bullish as it did a few months ago, does it, Nick? It used to be you see 90. I go, that seems really far out of the money. Now, up until, a week or so ago, that was like 15 handles out of the money. So 90 calls in DECE of next year, DECE of 2019, doesn't seem as outlandish as it once was. A total of 4,200 going up this week. The lion's share on Monday, 3,000 of those, but trading kind of actively throughout the week, the 90s in DECE 2019. And if you're not on that side of the fence, you think, I'm looking dark side, I'm looking downside, I'm not buying all this talk of a super spike in crude and everything else, then the 32 half puts in DECE of 2021, That's pretty far out there. DECE of 2021, lighting it up to the tune of 2,000 on Wednesday, and 2,000 on Wednesday. Also worth noting, the par calls going up Wednesday 2,000 times too. So maybe a bit of a funky strangle. The 32 half par, Dees 2021, easy for me to say, Dees 2021 strangle. I don't know, Mr. Nick, you think is that a strangle you're on board with? 2,000 of the Dees 2021 32 half par strangles?
Yeah, I'm looking at that too, and that's probably something that had to happen. That probably had to happen as a spread. When you bring up those, because you like going out to the far, I just don't get that. That has to be that stuff has to be hedges out there and not spec. I just can't see any reason to do it as a spec. It's just expensive. It's way out there. So I always find those strange. Like that 32 half par, that must be, could that be somebody's where they, their P&L range? So they're putting on some strangle out there, or I don't know. It seems like an interesting one. Seems like an interesting trade. But what I'm gonna do while you're going through the rest of them, I'll look up the blocks from yesterday and see how that see if that has anything in there with that trade, because that seems like a block trade more than it does to an outright trade. But it
does have the whiff of the blocks about it. That has a whiff of blocks about it. You look for that while I keep on rolling into our next product category. By the way, looking at that Brent WTI spread, this is the time when you think that would, kind of maybe be spreading out a little bit, maybe that impact a little bit more on Brent than WTI, all the Saudi stuff. And we're seeing a little bit of that reflected in the spread. Near term, the July, this is again the CME futures on the Brent WTI spread at about 430 or so, but going out a little, as you go out farther, it gets a little bit beefier, 5.5 or so for AUG. The SEP pushing 7, October 737, pushing 8 for NOV, and right exactly at 8 for Dees of this year. So you see as you go farther out, that widens out a bit, maybe reflecting a little bit more longer term structural issues out there on the Brent side, going to perhaps, and maybe some geopolitical issues going to impact the Brent side of the fence. Either way, that spread has been an interesting one to watch in recent months. Of course, we had the trade war and what's that's going to do, and now, of course, all the geopolitical issues that are just a staple of the crude market, as well as, of course, domestic production, and all of that kind of mixed into the toxic sludge that is crude, and that's what we got at least so far. We'll keep an eye on that as we keep on rolling into the equities. Again, you can find this on the QuikStrike. So if you're playing the home game, scroll on down to equity indices. Then we're looking at the U.S. indexes. The E-minis are where our attention is focused. You can pick a bunch of those. We usually start here in the land of the Russell 2000. And you'll see that net on the week has actually been a little bit of a quiet week for Russell, at least so far. Kind of net close to unched here coming in to showtime. We've seen vol ticking up a little bit. Our old friend, the RVX, which is the Russell VIX, threatening a 15 earlier today, about 14.8. That's up about exactly a point from this time last week. Around the same time, the VIX is right around the 12.5 VIX, of course. S&P 500 vol, RVX, Russell 2000 vol. So we're seeing that spread widening out a little bit again this week, right about a 2.3 or so out there. So that's something to keep an eye on, that spread, that vol spread, because it's always kind of interesting. Whenever we see it gets pretty wide, let's say north of 3 and beyond, we start seeing people interested in starting to trade the two indices, at least the vol of the two indices between each other. So something to keep an eye on out here going into this week. And, of course, on the equity side, it's been kind of a tumultuous week. We are in the middle of earnings season, so big names popping off. I think the big name dominating everyone's talk these days, not so much a small cap, but it's in there in the S&P, is, of course, Facebook. Facebook just getting annihilated out there post earnings. In fact, some people talking about this as like the greatest market cap annihilation we've ever seen on an earnings call post an earnings call here on the show. So interesting stuff in the equity land. Of course, a lot of that not really, again, one of the reasons why we're seeing a bit of a weird bifurcated market today. We're seeing things like the S&P down slightly, tech-heavy NASDAQ taking it on the chin pretty bad, and things like the Dow that someone insulated from the Facebook woes and the tech woes rallying a bit this week. So we're kind of back in that weird market where kind of every index is kind of playing to its base, speaking to its own crowd, and as a result, we're seeing these kind of weird moves. And Russell, of course, is no exception. We've been talking about that with Sean for a while here on the show about people have been kind of flocking to Russell because it is somewhat insulated from these crazy moves we're seeing out there of late. So vol creeping up again this week. Looking out here in terms of where we're seeing the action out here in the Russell E-mini 2000 options, and it's kind of looks like a bit of, again, the weeklies are where the action is when it comes out to indexes, and the weeklies out here in August are no exception. We're seeing weeklies active across the board. Let's see, actually the biggest trade we're seeing out here, the biggest contract out here is coming in, not in the weeklies, but in the SEP 17 halves, which is about 50 handles north of where we were coming into showtime here. So a little bit bullish paper out here, 17 half calls. Looking pretty good, taking kind of number one with the bullet this week, but kind of a quiet week. We are heading into that midsummer period where the equities aren't really on a cheer usually. So interesting stuff. Mr. Nick, have you been watching all the madness going on in the equity markets this week, and anything catching your eye out there this week, sir?
I actually been watching the equities quite a bit lately because I've been doing a little bit more trading out there, so I am paying a bit of attention. I mean, we were watching Facebook back when it got annihilated the first time from 195 down to like 159. So, just the day prior, before the earnings came out, it hit an all-time high at like 219 and change or whatever it ended up being. So to see it come off that much, that's pretty good. So I mean, I tend to like, in the equity market, I tend to like, getting in when a larger cap stock has gotten hammered, because it's a large cap stock for a reason. It's probably and generally pretty good. And I always look at that as an option buying opportunity or as just an underlying buying opportunity. The thing about the Facebook stuff is that the vol on it's really high compared to where it was when it was back down at 159 after that initial drop. So, if you're trying to do it's probably better off doing some covered calls than it is to do some call outright buys for the market moving back up into that range, because it got expensive pretty quick. But yeah, as far as the Russell goes, I know that they're happy with what's going on in this volume wise and open interest and stuff like that. It's hard to get excited about a product that's only got a change in OI of 1,000. But that's part of what we have to get used to as we cover this until it starts to get some legs with the options traders.
Yeah, I was looking here. You mentioned the big rout. This is the largest $100 billion plus rout, the biggest market cap loss in market history. The second biggest was Intel back on September 22nd. I had the pleasure of being out there for that. That was a crazy day. That was one of the. Something's crazy is happening when people from other pits on a slow day come gather around your pit to watch you, as kind of like a monkey in the zoo, because things are so crazy in your pit. Then Microsoft, $80 billion back on April 3rd, 2000, so also around that time. And then Apple, about $60 billion in Jan 2013, and the number 5, ExxonMobil, October 15th of 2008. So this market cap wipeout here, Nick, is record setting. Perhaps not a good record that I don't think any company wants to set, but still an interesting one nonetheless. I know, Nick, before I jumped into equities, you were looking at the blocks to see what you could find out about that funky, what do you want to call it, a strangle out there in crude. What did you determine, sir?
No, it traded as a block on a 250 lot and then or 800 lot and a 1200 lot of a risk reversal, squash, combo, whatever you want to look at it. So it got it gets reported as a buy the calls and sell the puts, but somebody's doing one side and somebody's doing the other side. So it was a risk reversal. So it was so that's an interesting one. So somebody's thinking that that's the range of crude, which is pretty wide range. So I have to look at the premium on there again. I didn't pay attention to what the premium was, but it is, what was the premium? Yeah, it traded, it was a 4-tick trade. So again, not sure. It's way out there, but somebody had an axe to grind. So
I like it. I definitely like it better as a risk reversal than I do as a strangle.
Sure. Yeah, for sure.
That's a much. I could sleep easier at night with that person having that one on than 2021. That's a long time away in the energy market. So look how much things have changed just in the last few months. So anything could happen by December of 2021. But still, an interesting trade. People put those trades on, thinking that's free money, the upside call they're paying for. Of course, you have to put aside the margin. You're carrying that margin for a long time on that put down there, listeners. So it's not exactly a free bullish position out there. And again, I don't have the you have the premium outlay on that one, but still crazy stuff nonetheless. Speaking of crazy stuff, Nick, we'd be remiss if we didn't touch on all things ags. What a just crazy time this has been to be watching the ag markets. Thankfully, we've been doing a lot of that here on TWIFO, and it's been a fascinating, I'm sure, probably terrifying for a lot of the producers and end users and traders out there as well, as they've watched kind of soybeans in particular just in this death spiral for the better part of the last month or so, ever since the trade war really started kicking in to high gear. Now we're starting to see, Nick, at these levels, and beans up a little bit coming into today's show, up close to 10 handles so far this week, so up about 1%. So getting a little bit back right around the 859, 860 level. So again, bouncing off at kind of that low 800 level, but still, these levels are still what the soybean industry is terming not sustainable. Their president coming out here and saying of the American Soybean Association, every group has an association, why not soybeans? Their CEO saying that these tariffs are a huge hit for producers, and it's led to prices that don't support farmers paying the bills. You know, ever since this trade war started firing off, soybeans down about 20%. So you can kind of maybe see where he's coming from. Interesting stuff here. And of course, in a bit of a weird kind of story, a weird addendum to the story, Nick. Of course, the big story was a lot of these agricultural producers were big supporters of the current administration, which led to these tariffs. And of course, now they're feeling the brunt of that. So of course, what do? They come out and announce effectively $12 billion worth of subsidies or supports, call it what you will, a three-part plan. They're going to borrow money from the Treasury. They're going to pay producers of soybeans, sorghum, corn, wheat, cotton, dairy, and hogs. They're going to buy the surplus that would otherwise have been exported, distribute that to food banks, other nutrition programs, and then the third prong of this plan is going to help farmers somehow develop new export markets. So $12 billion being spent on that. Again, we said we don't want to be political. We don't want to get political on this show. A bit of an interesting political choice, though, that to cause a trade war that causes all this damage and then spend a bunch of money to kind of try to offset the damage. Weird stuff. What's been catching your eye out here in ags, particularly soybeans this week, Mr. Nick?
Well, I was trying to jump in. I think you had me on mute. So, but what's been catching? No, I mean, the thing that catches my eye is the fact how stupid. I'll be political. How stupid the whole tariff thing is in the first place, and then the fact that we're going to subsidize it with $12 billion, and it makes absolutely no sense to me. So I'm gladly be political about that, because I have a lot of disagreement that goes on with a lot of the actions that are taking place in the White House right now. So catching my eye, the fact that outside of, I did see that news, and I thought it was dumb. We see a little bit of a vol pop this week, mostly. We see a good vol pop today in the new crop, in the November new crop beans. So that's sort of an interesting one, and I wonder if that is that's from today. I'm wondering if that's an after the close bad market that made that happen. I'm not entirely sure. I'll have to check, but what strikes me is that just how the skew has come in on the upside. So the calls are still rich today at the money, but they were offered quite a bit this week and already. So, if there's no anticipation of recovery here, then you're going to start to see that curve get into a little bit more of a balanced format. The puts are still cheap in comparison to that, the money. So it's an interesting looking vol curve given the price action here. So cheap puts, not that expensive calls, kind of a weird balance of volatility curve. And I'd be interested to see if anybody out there who's really active in the beans, if we do have anybody listening, I would like to talk to them about the shape of that vol curve, because it just seems a little bit odd to me.
No, it's funny you should mention that. I'm gonna cheat and bump up a question from our futures feedback now, because it's about this exact topic. This comes from LLN9. They want to know, hey, are beans calls showing any hope for an upside move in the next 6 months? So maybe he's a little bit of a beans bull. Maybe he's a farmer. I don't know. Maybe he sounds like someone who's clearly hoping for a bit of a reprieve in soybeans prices. Sounds like, Nick, we're not seeing that out there. Can't give him any hope.
Yeah, I don't know. It just this again. I look at the history of the quick skew, and it's not like this is uncommon. The shape of the curve here, but it just seems given where we are, the fact that it's gotten battered so much, that we might see a little bit more firmness. And but the calls and the puts are both pretty cheap to the at the money in comparison to where they've been. And even back in July of last year, we saw the calls really bid and the puts really offered. And we see we're about at our average, but maybe a little bit below our average. So yeah, we probably should try to get some ag expert on and talk to them about it and what they think. Because I like talking about the shape of the vol curve and where at the money's one thing, but the shape of the vol curve is really what's interesting to me, because I think that tells a lot about what the market thinks the underlying is going to do.
Yeah, maybe we'll go back, get some more of the ag folks back, because these are obviously big times for them. And we'll see exactly what they have up their sleeves for us, because they're out there slinging that skew day in, day out, and they could see exactly what's going on. Speaking of what's going on out here, let's look at the options out here. Again, soybeans are kind of where a lot of the trade wars impact has been focused, so we're going to focus our attention there. Again, a slight rally here coming into today for the beans on the week. Nick already kind of talked about the vol, kind of a bit of a weird mixed bag, kind of depending on where you're looking out there on the term structure. But it was lighting up out here. Again, if you want to find these listeners, head on into the QuikStrike, go into ags, grain, and oil seeds, and click on soybeans. And you'll see exactly what we're looking at here. And you'll see that it was indeed the, where are we here? We're looking at the Nove par calls, Nove 1000 calls. Number one with a bullet this week, by the way. OI, pretty decent, up only about 3%. You'd think a week with a lot of tariff-induced and subsidy-induced news would maybe drive a little bit more OI growth than that, but still 3%, kind of about average for a lot of the products we see out there on any given week. And it was the par calls out there in Nove driving the train this week. Number one with a bullet, about 13. About 13, close to 13,000, 12,943. The lion's share actually again today, a little more than half of that volume, over 7,000 going up. Just today, nearly 3,000, I should say. On Tuesday, about 2,000 on Monday. Wednesday, kind of the light day. Slightly opening for the OI. We have about 2,000 contracts. Then we drop off a little bit again here to kind of number two. Looks like we're looking at, again, on the calls, the 920, so a little bit more reasonable, about 60 handles out of the money or so, about 9,400 contracts going up there, about 5,000 going up yesterday as the lion's share. Again, about 650 or so net opening. So a lot of back and forth on a lot of these strikes. Puts not forgotten, 800 puts. Number three, 9,100 of those bad boys going up here this week. And then a lion's share of those actually on Tuesday, 3,700 on Tuesday, Monday, about 3,000. Let's look around here. Skipper Haig, 60 puts, also doing pretty well, about 5,000 and change. Now let's jump around here, see if we see any other funky paper. Worth noting, 860 calls also there in AUG. Doing pretty decent numbers, nearly 8,000 contracts going up, 79.27. The lion's share actually on Tuesday, 4,600 going up on Tuesday. A net about 530 or so closing on the week. And let's scroll around here a little bit, see if we can see any funky paper. 1140s out there in July of 2019, doing about 1,000 contracts this week. So a little bit of optimistic paper out there for all you soybeans bulls, like it sounds like our friend, what was that name? LLN9, I believe. It sounds like they are in the soybean bullish camp. So interesting stuff. You know, Nick, it has been kind of fascinating to kind of watch this back and forth here in ags, and just kind of in terms of the vol, in terms of the volume, in terms of everything else. It's been an educational experience, I think, for us here on the show. I know a painful one for someone out there, but still, it's been interesting for you as well to watch kind of just what's been going on out here in the ag markets over the last month or two.
Yeah, I mean, I wish there wasn't this tariff stuff going on, because then you'd get more of a, I don't know, you know, there's so much affecting it now. Nobody's been talking about the fundamental part of it, the weather and the harvest and all that kind of thing. Everything is just based on demand from the actions from the tariff. So it's hard to watch, knowing that people's livelihood are being affected so dramatically. It's probably welcome for the market makers and brokers, just because there's a lot of activity, a lot of things have to go on, a lot of hedging, and I'm sure it's keeping people on their toes. So, but you know, this too shall pass. So my father always used to say. So all this noise will eventually be out of the market, and we'll see how the tariffs ultimately affect it, if they even stand, or if they come to agreements like they happen to be coming to agreements with everybody else, make a big threat, all this action happens, then they agree to do what they were going to do in the first place. So we'll see how that goes.
It's been a while since we've had a good chat about all things crypto here, Mr. Nick. So let's do it. Let's dive into it. It's been an interesting time, for a while there. Bitcoin in particular, and a lot of the crypto is getting pounded sub 6,000 level, getting into the $5,600, $5,700 level out there on Bitcoin. This week, another week, a little bit better noise out here, a little bit better levels for Bitcoin coming into the show at around 82.50 or so. Looking right now on the CME futures, the July contract doing about 5,000 contracts, total of about, looks like a little over 6,000 across the full term structure. So a pretty decent day out here, all things considered. Remember, listeners, this is a 5X contract on the multiplier. That's a beefy contract. In terms of volume, actually, the futures hit a record back on Tuesday, with nearly 13,000 contracts, 12,878, according to CME, the equivalent of 64,390 Bitcoins. If you do the math, that's a notional value of $530 million, roughly $500 million worth of Bitcoin futures going up there on Tuesday. So crazy stuff to be watching out here, Mr. Nick. Have you been keeping an eye on all things crypto, sir, out here?
Yeah, I've been watching it, still holding some stuff, obviously. But I think, if people are wondering, this futures volume is going to lead to them starting to look at putting some options behind it. Because when you got, what do we got here? 3,000 in open interest, which is pretty good. And that open interest is like a butterfly almost. July's got 900, August got 1,700, and September's got 650, and then there's even some stuff out in Dece. So big volume numbers. I was trying to look at that. You mentioned what it is from a notional standpoint, but if we do 64,000 over 21 million and do the division, that's like, is that right? 30%, 64, 1, 2, 3, 30 times. Yeah. So, that's a big part of just the outstanding Bitcoins that are even available to trade. When you get 64,000, there's only 21 million out there. So that's a lot going on. And I think this is telling us, I haven't looked at the SIBO numbers too much because just don't pay attention to exchange all that much. But I'm wondering, are they having the same kind of volume records? So you haven't seen the same kind of newsletters coming out of there about all the activity that's happening. So I wonder if people have made this the exchange of choice for their Bitcoin hedging, because this is big activity. Like today's volume, I think you said it's almost 6,200 already. And so options can't be long.
From your mouth to the regulator's ears there, Mr. Nick, as we hopefully, and maybe the exchange's ears, is hopefully we'll see. We still get that question on a regular basis. When are we going to see options? Interesting stuff here. Speaking of regulators, looks like the CFTC taking a renewed focus here, trying to, as they term it, control the crypto markets. He says this is their CFTC commissioner, or chairman, should say, Chris Giancarlo, saying the crypto market has matured, has an influence on the whole financial space. They're impacting trading markets and the entire financial landscape with far-ranging implications for capital formation and risk transfer. They are transforming the world around us. It's no surprise these technologies have an equally transformative impact on U.S. capital and derivatives markets. He says investors should be aware of the high risks, blah, blah, blah. I'm looking to see if there's any heads up here about any new stuff we might be getting here anytime soon. So they're collaborating with the SEC to get rid of the bad actors. Quite a bit of those. So I'm glad to see that they're doing that, trying to speed up with an MOU with the SEC to speed up maybe the approval and regulating of new products. So hopefully this will help pave the way for the aforementioned options. Right now, though, it doesn't seem like they haven't mentioned anything by name, and you're right. We'll keep an eye on this, though. Hopefully all of this will lead to something more in the near future let's see, blockchain, talking about blockchain here. A lot of stuff. Everyone and their mother talking about blockchain. Speaking of everyone and their mother, it's time for you guys to join us here on the show. You can bring your mother too. We don't mind. It is time for the Futures Options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback, your portion of the show, the portion where we break down what's on your brains. We actually had a good question last week about the quick skew. I know, Nick, you guys and your team put out a link to kind of the overall overview of how to read that. I encourage you listeners, if you listen to this show, go check it out. It's pretty easy to find. It's just bantix.com quick skew. Remember, there's no C. QuickSkew. Easy for me to say today. But if you go through that, it's a pretty informative way to explain exactly what you're seeing. Because I know you guys hit us up all the time. Like, what does this mean? What is this, 2.1P, 5.4C? That'll kind of explain it all for you in a lot more detail in terms of the capital letters, the lowercase letters, what that all means. In general, what you're looking at is just kind of showing you the level of the vol compared to the at the money, and if it's above or below. That's pretty much what that's breaking down for you. But trust me, it looks a lot more intimidating than it is. Would you agree with that, Mr. Nick?
Well, yeah, I mean, I had a long talk with somebody who was calling and asking questions about skew the other day, and the part of the reason we did it was because the skew itself, when you do the risk reversal itself, it just doesn't tell you a lot about what the shape of the curve looks like. So I wanted something that I could look at and see the shape of the curve over time very easily. So, if you do a quick skew chart and you put 25 and the 15 delta on it, you can tell exactly if you put the 5, however, whatever, 25 and 15 is usually enough. 5 points is usually enough to really give you a good idea of what the curve looks like. But if you did that, you know exactly what the shape of the curve looks like. You know whether there's a belly in the curve. You know whether there's whether it's a big tight smile. You know if it's a smirk one way or another. So that's why I think it's a good measurement, because it normalizes it away from the level of volatility. That's the other reason to do it, right? Because 2 vol percent when the volatility is 100 is a lot different than 2 vol percent when the volatility is 25. So that's really the reason. And yeah, it's meant to give you a quick view of how distant the call and the put are and how much they're separated from the at the money. So I think once you get used to it, you'll like looking at that better than you like looking at the skew personally. And you could do that for any market. We happen to do it for the futures market. So.
Yeah, it gives you a good little kind of visual, not quite visual, but, a numerical representation of what's going on with those 25 delta puts and those 25 delta calls. You okay there, sir? You falling off your chair?
Nope. Just drinking my iced coffee. And we put the 25 delta because that's sort of the most popular or the most talked about risk reversal. But you can do a quick skew for 5, for any increment of 5. From -5 to +5. So it's available out there. I'd like to see some people that are listening go out there and register. And let me know what you think.
Let's see here. HLC. They want to know. I have a couple of FOPs. I like that. FOPs, futures options. There's a reason why we didn't call the show FOPs. I think you probably figure it out. But TWIFO, a little bit better there. I have a couple of FOPs that are going to expire deep in the money, but covered by the underlying long futures position. When should I expect the long position to disappear from my account so I can hedge accordingly? Would I have the position till end of day Friday, or is Thursday the last day, or would it disappear from my account anytime during Friday? Well, don't really give us a lot to work with here, Hilk HLC. I'm going to assume, based on what you wrote, that it's probably an in-the-money index call, and you're talking about covered, so I'm going to assume you probably got a simple covered call on, so you're long the underlying, and you're writing a call against it. In which, again, the underlying would have been helpful. We could have told you more specifics about exactly when these things are going to expire and go away. But pretty much, if you have them as they're lined up with the expiration cycles, you shouldn't have any problems with these things kind of disappearing in different time. Now, if you're talking, you have like a front month future, and you wrote, a 6-month call against it, that's a little bit different deal. Obviously, the call is going to be around a lot longer. The future is going to go away. So a little bit of a different beast there. But I'm going to assume you say everything's kind of covered. So I'm assuming you're good. You shouldn't really have any expectation. This should probably go away in settlements pretty much over the weekend, right, Nick?
Yeah, I think so. That question is not the clearest, but yeah. It's going to be, I think all of them are generally auto exercised, so he's not going to have to do anything. And plus, if he's short, he's going to get assigned. So he's going to get assigned. They're going to pull it. I think they pull it automatically from your account, so I don't think he's got anything to worry about. But if he's in there, it's not like he's going to, it's not like he'll be out of balance, right? They'll make sure that, once it's gone, it's gone. They'll take that as the contract expires, I believe.
Yeah, they don't want you, the exchange doesn't want you with imbalanced things. The brokers don't want that. So they're not in the process of, somehow making your account naked, longer, short deltas for a few days as a result. So yeah, don't, again, doesn't sound like you're worried about it. If you have questions like this, a little more detail would help in terms of what the underlying is. Maybe it was beans. Maybe it was something weird, fluid milk. We don't know because you didn't tell us. So hit us up with that. Excuse me. Let's see. Joanna Lan, pick your poison. She wants to know, what kind of courses do they offer at CME Institute? Are they all in person or online? Well, that's actually a good question. Some CME educators reached out to me recently at an event. They were fans of TWIFO, and they want to come on and kind of talk about what they're doing. So maybe we'll get some of them on so they could kind of speak for themselves about exactly what they have going on over there at CME Institute. But if you go over there, just search for CME Institute, you kind of find it yourself. They have the course catalog, and most of it is online. I don't think they're doing a lot of in-person events, but that could potentially change in the near future. I'm looking here, on-demand webinar series on Treasury futures, all kinds of stuff out there. So a lot of the basic questions, like the one we just answered about when the options and the futures go away, they'll have a lot of that stuff. In fact, they have a cool little search bar there. You can kind of just type in and kind of search for your courses. So I do want to get some of their educators on the show so they can talk about kind of what they're doing over there, but also from their perspective relate to us what they're hearing question-wise from you guys out there in terms of the retail audience. What are you looking for in terms of options? What is on your mind? I'm looking here. They have a lot of stuff. They have trading psychology, introduction to options. So that'd be a good place to start for questions like you guys just asked us there. There's a lot of product kind of introductory stuff, in terms of product complexes. So nat gas, crude oil. So if you're new to a lot of these things, I know a lot of you are, then that's an interesting one. Here's actually a good one, I think, for a lot of our audience. Options on futures for equity traders. I know a lot of you guys are coming from the dark side of equities. You're watching the Facebooks and others and the indices, and you want to maybe dip your toes in the futures options waters. That one would probably be a good one for you. There's a bunch here. So, I'm looking here. There's 15 pages of courses they have in their course catalog and more coming. So interesting stuff. Nick, have you had a chance to check it out? A player I know used to be called, obviously, the Futures Institute. It was obviously very focused on futures, but in the modern era, you got to talk options too, and it seems like they're building that in going forward, doesn't it?
Yeah, I will. I'm going to send something. I'm going to send something to you. You could tweet it out. So there's a lot of different stuff. I would just go up there, and they have a whole series of videos that explains pretty much everything. I will push this link out so you can send it out here. Let me see where it is. Here, this is a 5-part series that I actually did for the CME, which was an introduction to futures options, and it's like 5 average of 3-minute videos. So if you want to push that out, we could throw that out there, and I think it's pretty good. I wrote up the course, and then I presented it on video, and then it's up on the Futures Institute as well. You might find it, but it's a little bit older than the newer ones the newer animated ones that they have out here. But I personally think this one's pretty good.
There you go. So if you hadn't had enough here of Nick on the old TWIFO program, then you can get some more love for him here on the old CME Institute link, and we'll tweet that out and share that out for all of you out there listeners. Let's see what we got here. We got time for one more. Here's one that's up your alley here, Mr. Nick, because you're named in the question. This comes from, I don't know, Brezner wants to know, Nick from QuikStrike has suggested being long gold with a hedge. Is he just suggesting being long the futures with a long put hedge, or just long gold deltas through something like a risk reversal and then having a long put kicker? Mr. Nick, I know you said that before. That's kind of one of your favorite things. The gold vol was cheap enough; it was moving a little bit. Maybe not so much lately, but still, what do you got to say here for our friend here, Brezner?
Well, I think when I talk about long gold, if anybody who's listened for a long time, I'm usually talking about from a volatility standpoint. So I always like to when vol is low, I like to think about when vol is low and we're at the bottom or the bottom of a range or near the bottom of a range or trading around the bottom of a range. I always think that it's worth buying puts and buying futures. So you're basically long volatility. You're also long those futures. You're hedged, so your margin's a little less. But then if you get any kind of movement upward, then you get to scalp those deltas with the gamma on the option. And if you continue to go lower, since you're at the bottom of the range, there's a good chance that you bought some cheap volatility, and you can either rehedge if you go through or go lower, or you can get out of your spread, your covered options for a little bit of a bump in premium. And same thing goes when you're at the higher end of a range where, I like to think of it as buying calls and selling futures, because now I can, if we continue through that top of the range, you might get a pop in the volatility. But if we go lower, you're short deltas from the hedge against the calls, and you don't need much of a movement down to scalp out of a 20 or 30 delta call. So that's kind of how I think about it. And vol continues to be low in gold. So I don't know. I think you got to really watch for the right kind of placement, because you can get long here and just get hammered, which happens quite a bit if you just kind of stick to the long positions. It's got to be just the right timing and the right position in the futures, that kind of stuff.
All right, listeners, that music means it's time once again, unfortunately, for the end of the show, for the end of TWIFO. Amazing how quickly an hour flies by when we're talking FOPs, when we're talking futures, options. If you're listening live, we're going to take a little break here while we make sure we sort out all of the issues that whatever was going on with that early stream. We'll probably reboot all the systems, make sure it's good to go. So option block will be on as usual at 3 o'clock. You can come back for that. Go get a drink, a beverage, relax, take a bit of a bathroom break. Join us back again at 3 o'clock. And we mentioned the CME Institute. You can head on over there, CME Institute, to learn more about all the different things they have going on over there. And cmegroup.com/TWIFO. Kick the tires on the old reports over there. And our buddy Sean couldn't join us this week, but FTSE Russell, FTSE Russell, is the place to go for all the information, the data, the benchmarks, all the studies and research they do. Maybe you give them a follow over there on Twitter while you're at it, at FTSE Russell. Why are you following Twitter, people? QuikStrike1, QuikStrike1 is the place to go. He's always putting out great links, data, all kinds of cool stuff out there. So if you're not following him, make sure you do, because that's where you get all the data. And Mr. Nick, you guys are always cranking away on cool stuff. What are you cranking away on this week?
What are we doing? Just cleaning up our new QuikVol tool and making it nicer and easier to use. Got some new tools coming out shortly as well. So as those become available, we'll let people know, and you should take a look at the full version of QuikStrike. We're now doing SKU updates every 15 or 20 minutes, so it's full curve fits, and that's part of part of the new release out there. So you're really getting some up-to-date information, and you're getting the quick skew getting updated throughout the day, as opposed to it used to be just sort of one time a day, and also getting some intraday quote-unquote historical dots that are on our historical charts, so you can really see how today is stacking up against the past. So, you know, if you haven't been taking a look, I think it's time to go out there and take a look.
There you go. Take a look, kick the tires, and light the fires, as they say. Bantix.com, BANTIX.com. And you get out there, you're going to see a bunch of stuff there below the fold that you can choose. Scroll on down to the QuikStrike there on the left. Click on Learn More. Just click on the blue button on the bottom there. Try QuikStrike Options Analysis Software now, and that you'll be off to the races there with exactly what we're talking about here on the show. All the things, the graphs, the skew, the volume, the opening, all that cool stuff we got here, and a lot more. Check it out, Bantix.com, to learn more. And on behalf of Mr. Nick and our friend Sean, who couldn't be here, our buddies over there at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. And we'll see you back here next Thursday for more TWIFO, unless you're joining us live. Then we'll see you back here in about half an hour for all things Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.